welcome to a commodities, stocks, and cryptocurrencies market update. I am Styliana Charalambous, the head of investments and market research at Pure Fintech. The Russian army has begun a military operation in Ukraine as missile explosions have been heard surrounding several areas, including the capital of Kiev. Markets have dropped in response. Global crypto and stock markets plunged after Russian President Vladimir Putin announced on a national broadcast that his army will conduct a special military operation in Ukraine. Now, let's see how the crypto market reacted on the news. In the last 48 hours, Bitcoin's price has dropped below the $34,500 mark, and Ethereum has done similarly, falling to nearly $2,300 early yesterday morning. The Russian invasion on Thursday triggered the bears, leading to a $500 billion crypto market sell-off, where the majority of the cryptocurrencies lost critical support to trade at a 3-month low. The crypto market capitalization saw a 10% decline during early morning Asian trading hours, falling below the $1.5 trillion mark. Bitcoin is considered an inflation hedge, and many expected its price to show resilience at a time of crisis. However, Sam Bankman-Fried, CEO of the global derivative and spot crypto exchange, believes that Bitcoin's decline was no surprise. Bankman-Fried noted that the currency stabilization in Eastern Europe, suggesting that investors in Eastern Europe could look for alternatives due to the Ukraine invasion, which could make Bitcoin an obvious choice. He also categorized investors' mindset into two types: fundamental and algorithmic. He explained that fundamental investors look at the market situation and sentiment, while algorithmic investors prefer data. The fundamentals of the market, as he said, indicate the buying opportunity since Bitcoin is a crisis hedge, while going by the data and Bitcoin's correlation with the equity market, the algorithmic investors prefer selling. According to this theory, the push and pull between the fundamental and algorithmic investors has led to a halfway mark of the current Bitcoin market. Now, let's see how the commodities market reacted on this news. Commodities market surged, with Brent oil extending gains above $100 a barrel, and for the first time since 2014, when Russia annexed Crimea, while gold jumped as investors scrambled for heavens. Russia's benchmark MOEX index tumbled the most on record. MOEX is the Moscow's exchange index. Podcast host and crypto investor Anthony Pomp pointed out that since Russia is the world's third largest producer of oil, the impact of this situation is going to be felt globally. Last but not least, let's see how the stock market reacted on this news. Across the pond, Wall Street was also deeply in red. S&P 500 futures went down 2%, Dow futures also shed 2%, and Nasdaq futures were 2.6% lower as trade began in Europe. Asian stock markets plunged overnight, with the Nikkei falling 1.8% in Japan, while the Hang Seng fell by 3.2% in Hong Kong, and the Shanghai Composite dipped by 1.7%. Markets woke up in a panic mode as investors reacted to the news overnight of Russia's invasion of Ukraine. Walid Kundami, chief market analyst at the financial brokerage, said, "We have seen clients sell out of risky asset classes such as stocks and buy gold and the United States dollar, which are seen as safer investments at times of uncertainty." Investors hate uncertainty, and whilst it's inevitable that the West will respond to Russia's aggression, what's unclear right now is by what severity and what situation could escalate further. As a result, investors are seeking asset protection and don't want to take on any risk to their portfolios. That's how the market has been developed in the last couple of days. If you have any questions or if you want to open a trading account with us, you can contact us through our website or our social media. We'll be more than happy to help you. Thank you for watching, and let us all pray for a better and peaceful world.